When you are thinking about the development of people, and this holds true for large organizations as well as it does for a country, is how much freedom are you giving them, how much independence and structure that they have in their lives. And often it is about the balance of power between the state, which is the government, and the business.
India is becoming more aspirational. It is absolutely important to ensure that they are skilled because their aspirations are going up on a daily basis. We've got to skill them first and then ensure that they have jobs.
The income pyramid of the country, right? And it was a very steep pyramid, right? Even if you look at the latest data, I think 5 crore people file taxes, which means they earn more than 5 lakh rupees. So this middle class that we keep talking about, where is that and when will that come? Hi, welcome to another episode of Open Dialogue by Axis Bank. Open Dialogue is a forum to bring to you topics of macroeconomics, finance and banking with some eminent experts in the field. I am Shetty, I am your host for the day. I am joined today by Rajiv, Anand and Neelkanth Mishra. This is a continuing episode in our series of topics on India. In our last episode, we looked at the balance sheet of the country, corporates and banks. Today, we'll deep dive a little bit into the consumer sector and particularly look at the demographics of India. A quick introduction for our eminent panelists. I'm joined today by Neelkanth. Neelkanth Mishra is the Chief Economist at Axis Bank. He is also a member of the Prime Minister's Economic Advisory Council. He is also the part-time chairman of UIDAI and a very popular face in the topic of global macroeconomics. Joining me also is Rajiv Anand. Rajiv is the Deputy Managing Director of Axis Bank. He has had multiple decades of experience in key management positions across financial institutions in India and globally. His expertise lies in the areas of asset management, treasury, corporate banking and wholesale banking. Thank you, gentlemen, for joining me.
Thank you for having us.
So we'll very quickly start off the topic to tee off Neelkanth. India has always been touted as this bird of gold, but in reality, that promise has not been delivered fully yet. So what's happened here? Can you just kind of run us through, play the movie for us, if you will?
So the opportunity size remains very significant. The fact is that over the next decade, India will be adding the most number of workers or people of working age to the population. So the opportunity size is very big. I think where we have struggled is that we have not used our human assets much more productively. We are not training them well enough. We are not taking care of their health well enough. If you have a large percentage of kids who are malnourished or stunted till the age of 5, their brains are never going to be fully developed when they are adults. So we have struggled to solve some of the basic problems, but what is very heartening is that in the last 20 years, we have made big strides in solving them. And some of those people are now becoming of age. They're joining the workforce. So we are seeing significant improvement in the percentage of people who are graduates. People are healthier, and we have also provided them with absolutely essential infrastructure, like road connectivity so that they can move around, electricity, dense energy forms like cooking gas so that their daily productivity can improve, data connectivity, phone connectivity. So there is a lot of basic infrastructure that we were not providing our people. We are also helping them provide capital. And India has never been short of entrepreneurs, but we have always been short of capital. And the problem was, and it's to a large extent true for every company in the world, it's not just in India, that even though capital is available, providing it the right size to the right people has been a huge challenge. And one of the reasons why we should be more optimistic about the next 10 years than what we have managed to do in the last 10 years is that not only is our balance sheet much cleaner than it was? Because remember, the last 10 years also we had solved those problems, but we were going through the cleaning up of balance sheets. But as we go forward, the large number of people joining the workforce have, well, much better capital, better access to energy, they're much more connected to the world, they're much better educated, and they have much better access to information. So to get more out of them is a lot easier. One last point, when you are thinking about the development of people, and this holds true for large organizations as well as it does for a country, is how much freedom are you giving them? How much independence and structure that they have in their lives. And often it is about the balance of power between the state, which is the government, and business. In countries where the state is super dominant, it starts to prescribe. The license Raj was an extreme case of that. The productivity and the entrepreneurship here is not very, very high. Whereas what we are seeing in India is that the state is willingly taking a step back and allowing businesses to thrive because it sees the merit in allowing the economy to grow, which is the reason why I think all that promise that we have perhaps not lived up to, there is a reasonable probability that we will do so in the next 10 years.
Great. So Rajiv, you obviously run the consumer business for the bank, also in the mutual fund earlier. How have you seen the consumer behavior change, and what do you see happening from here?
I think the last 10 to 15 years has been a seminal shift in terms of consumption. I think we've seen the evolution of, let's say, not last 10, 15, maybe 20, 25 years, the evolution of television, and I think that has built aspirations not just in South Bombay, but deep in this country. People can see how the world is living, people are able to see how urban India is living, and therefore aspirations have gotten built. So I think that's the first and important part. Once the aspirations get built, meeting those expectations then become very, very important. And in the previous episode, and I think Neelkanth briefly spoke about this, and we spoke about it in the previous episode as well, is that therefore, given the fact that India is becoming more aspirational, it is absolutely important to ensure that they are skilled. Because their aspirations are going up on a daily basis, we've got to skill them first and then ensure that they have jobs, because if you are not able to do that, either we'll have a nation of liftmen and watchmen and delivery boys, or we will have social unrest. And so therefore skilling this population, I think, is super critical as we go forward. But having said that, I think the middle class, the middle and the upper middle has really come of age over the last 10 to 15 years. More brands are now available, and the evolution of e-commerce has ensured that where in the old days distribution was an issue, meaning that you could only go and buy a certain type of shoes if you had a particular store in your area or in your city. That is no longer a problem. I mean, you can just go on to Flipkart or Amazon, and irrespective of which city you are in, you are able to buy exactly the same sort of things that somebody in South Bombay or South Delhi is able to buy. And therefore that has ensured that the geographic spread of consumption has rapidly increased.
Right.
That has also been driven by the entire sort of digital foray that we have taken over the last 15 odd years, and I think a call out is certainly necessary to the telecom companies. I think they are in a sense underappreciated, because everything that we are able to do on digital, and Samir, you are part of digital banking, you wouldn't have a job if the telecom guys weren't able to do what they were able to do, and that has ensured that the ability to pay has become much easier. Today we are doing 10 transactions per month per Indian.
Yep.
On through UPI.
Yep.
Phenomenal.
Yeah.
Right.
I think they are expecting it to cross 10 crore transactions next month, right? Like
unbelievable numbers. And I think the adoption of UPI, and it's not just people like us, but it is widespread. It is simple, easy to understand, and that is in a sense transformed the way that people are consuming. And for businesses, for the government, it's also great because a lot of the stuff is moving from informal to formal. There is now a digital trail, so the taxman can go after them. But at the same time, for banks like us, we now know you better,
Right.
And so therefore our ability to underwrite you and give you personal loans has improved, and so therefore aspirations have increased. The ability to meet those aspirations either with your own, because you've got a better job and getting higher incomes, or you're coming to banks who have built a phenomenal retail lending business over the last 20 years, has helped meet those aspirations and therefore consumption.
There was this fascinating statistic. So I don't know where I saw this, but if you go to 2006 or 7, and if you look at what was the size of consumer lending in the country, that number is the same as the size of Axis Bank's consumer lending book in 2018. So in 2018, Axis Bank did as much as the entire country in just maybe a decade or 12 years back, right? It's just fascinating to see the kind of...
And that's happened, Samir, one, because people want to buy and consume various goods and services, but also banks have gotten a lot more confident because the infrastructures got constructed,
Absolutely.
right? I mean, I know you better because of digital and data. Mobile has helped me deliver that instantly to you. Banks like us were able to do a personal loan for pre-approved customers in a matter of seconds now. So therefore, you could be standing at a store and you need a loan, and you could get a loan instantly. And the evolution of credit bureaus, the evolution of Neelkanth's part-time job, Aadhaar, has been phenomenal.
Absolutely.
And
phenomenal,
therefore, your ability to ensure that I'm doing KYC is no longer based on a piece of paper. I'm able to ping the Aadhaar database to authenticate you.
It is easier, it is cheaper, it is also more authentic.
Correct.
Because the ability to do fraud itself kind of goes down quite dramatically. So it just kind of win-win from every angle, right? There is no compromise.
And so therefore this whole infrastructure has gotten built, and that has fueled retail lending in this country. And I think this machine is going to continue to chug along as we go forward. And I think the point that Neelkanth made is we will get into middle income categories, which means that aspirations are only going to go up, which means consumption will continue to go up, and which means that retail lending will continue to grow.
Right.
And I must add to that and this is where the first step to any important change is ambition and risk appetite. And I think consumers and the younger consumers today are a lot more willing to take on debt than perhaps people 20, 30 years back. Because debt at that time was, there's a sense of shame.
It's a bad word. Yeah, it was a bad word.
Yeah, and today you find personal loans of 40 lakhs being taken to redo the house.
Yeah.
And it's quite remarkable. And these are the specific case study is two professionals in a top level consulting company who are taking a 40 lakh loan to do up their house. So this shows a level of confidence in the future that I will be able to earn and spend it. There are rich people spending 40, 50 lakhs on one travel, on one trip, and taking a loan for that. These would have been unthinkable even 10 years back.
No, absolutely. Fascinating point. Now, Neelkanth, just coming to you, since we are in the topic of credit, just talk a little bit about the balance sheet of the Indian consumer and what it looks like today, and again, how it looked like 10 years back, and hence what does that mean for us as a country?
So it is definitely under-levered. So if you look at retail loans as a percentage of GDP, we are nowhere compared to what the US, China, Europe, or any other country are.
So we are what, 1/6, 1/7?
Yeah, and one of the most important factors here is mortgages. So even 200 years back, the most popular form of consumer credit was mortgages.
Mortgages, yes.
because it is the safest type of loan to give, because the person is living there, they do want to continue living there, and there is a hard asset that you are underwriting at the time of purchase. So it's a very safe loan. And I think there is significant growth that can happen. The only issue in India is that a lot of the houses are self-built.
Right.
So you can underwrite a mortgage if there is commercial developer building it. Same with autos, right? So the largest consumer loan categories after mortgages would be autos in most markets, and the auto sector penetration is just about starting to take up, right? So we are still, I would say, 1/6 the size of China, and so there's a significant room for improvement there. You look at things like education loans, or things like unsecured personal loans, and with this, and in fact, I must say that a lot of personal loans are also kind of disguised business loans, because there is such a high informality in our economy that the shopkeeper cannot borrow against the shop, because the shop is not a company.
Yep.
And so the shopkeeper is forced to take a loan for themselves and then deploy it in their business. So,
and the personal loan, by the way, is cheaper than what he would otherwise have gotten as a
100%.
from his from the neighborhood
Money lender.
money lender, correct. So therefore, I think the scope for this to rise is significant. What we need to be very careful about is that, and of course now, as Rajiv was saying, we know, with these account aggregators, with consent, and so there is a very nice consent architecture which is also coming up under the new regulations. So if they want that loan, they will allow you to screen their bank account, bank statement. In the bank statement, you can see over the last 1-2 years what is the regular inflow, what is the regular outflow. You look at what is the monthly saving, and you can go up to 50-70% of that and give them as a loan, as EMI, right? So I think the systems to deliver those loans have also started coming up. But at the same time, I think we need to be a bit careful about the pace at which this starts to grow. What is quite remarkable and encouraging is that even the regulator is letting it happen. So they've given the warnings, but they've still not raised the risk weights, and which suggests that they are watching it, but they also don't want to stop it just because they don't understand it, right? So maybe it is something that needs to flourish for a while and can flourish for a while before it starts to get into very risky territory.
Right. So I'll just take on that point, and Rajiv, come to you, which is, you have on one side, you have India, which is 1/6 the indebtedness at the consumer level compared to, let's say, US or a China or whatever. On the other side, you have basically consumer delinquency levels which are at historic lows, and India has perhaps had 15 years of low consumer delinquencies, right? And by the way, at the same time, at this point in time, there is a lot of talk around, potential kind of bad debts being created in the consumer sector. So is this a problem of, one leg in hot water, one leg in cold water, and hence on average you feel good, the 1/6 delinquency, or is it something else here?
I think the lending that we do, let me just use the credit bureau score. A score of around 700, anything over 700 is considered to be, safe. I mean, think of yourself like a AAA, right? I mean, most of the lending that banks are currently doing is in that vicinity of a 700 credit score. So we still haven't got to the next level of borrowers, and so therefore, if I were lending to the two of you, I mean, I won't have expected you to default over the last decade, because you've got stable jobs, you've got annual increments and bonuses, etc. The likelihood of people like you defaulting is very, very low. And in a sense, you're lending to these type of customers. The next phase of growth really will be as you keep going lower and lower in terms of credit scores. We are not there yet. I think we spoke about how generationally it has become socially acceptable now to be able to borrow. right? Maybe perhaps that's the shift that's happened from the time that I can't remember my father having any loan. I mean, I had a loan quite deep into my career, but young kids today at 25 have some loan or the other. I think phase one, they've gotten comfortable with loans, but they also recognize the social stigma of defaulting, the fact that they'll never ever get a loan again, etc. And so therefore, in that phase of evolution, that's where we are. I think as we continue to grow over the next decade, we will certainly see maybe a little more affluence, but as we get a little more hungry in terms of growth, we will start to write slightly lower levels of credit as well. Maybe test it out, maybe see how it works, and so on and so forth. So seeing a retail credit cycle, I think is some time away.
Right.
Still very early days, to my mind, in terms of how retail credit is currently playing out. If you look at it from 2012, 13 to 2023, except the brief period which was really COVID induced, we've had a fantastic cycle. If you look at an industry level, if you look at some of the early delinquency numbers, there doesn't seem to be anything that seems to indicate that there is anything of great concern. The two things that one always watches out for on retail lending is a significant diminution in value of assets. So Neelkanth spoke about mortgages. If let's say house prices drop by 50%, it is inevitable that you will see delinquency. We are not in a situation like that. And the other is widespread job losses, right? I mean, you lose your job. I mean, the probability that you'll have enough money to be able to pay your EMIs, will reduce every month on month. We are not in that situation either at this point in time. Ultimately, like we discussed in the previous episode as well, ultimately it comes down to how the underlying economy is doing, and so therefore, if there is general well-being, jobs are being created, increments are being got, the likelihood of a retail credit cycle is to that extent unlikely.
Yeah, and another kind of fascinating data point, we've just started lending with partners, personal loans, and the age group that is the largest in terms of demand is 22 to 28-year-olds. Again, very fascinating, because typically we see kind of a slightly higher age group who are taking loans, but clearly that's also changing quite rapidly. So just changing tracks a little bit, Neelkanth, you've spoken multiple times about this fertility rate, and how that's kind of dropping and creating some fairly major shifts for the economy. Just enlighten us about this topic.
So the total fertility rate, the definition is the number of children a woman has in her reproductive age, right? So in a population, the long-term sustainability for long-term sustainability of the population, you need a fertility rate of 2.1. So 2 parents, 2 kids, and then there's a 5% mortality, right? So our fertility rate is dipped below 2.1 now. So in 2020 it was 2. That doesn't mean that the population will start falling off today, but it's that over the next 30-40 years, the population will slowly stabilize and then start declining. Now, when it falls below 2, for the first 20 odd years, the dependency ratio starts to drop. What is dependency ratio? It is the number of consumers per producer.
Right.
So, as the young age dependency ratio starts to drop because there are fewer kids, it does several things. One, it frees up time for the parents, or would have been parents, to doing work which can be counted as GDP, because bringing up kids is a lot of work as well, as we all know, but it is not counted as GDP. And so as you start doing more commercial work, or you start doing more work for what you can export, or and therefore the incomes then improve, right? Because then you are earning more. The second is that you don't have to spend on that, and therefore some part of that also improves your savings. And as you have, at an economy level, uh, you have fewer consumers per producer, your aggregate savings start to go up, right? And so that classic example that you gave of one leg hot water, one leg cold water. So basically, as savings in the economy start to go up, the cost of capital starts coming down, and then uh, there are more people who want to borrow from the future and start spending today. So a lot of interesting things start to happen. The economy, like this is what Japan went through in the 70s, China went through in the 90s. The economy starts to shift into a current account surplus. So basically, this, as we discussed earlier, that the current account balance is your consumption minus your production, or production minus your consumption. So if you are consuming more, you have a deficit. In this case, you start shifting from what India is at, current account deficit, to possibly a current account surplus.
Right. And so, Rajiv, how does this play out for, let's say, the savings in the country? And are you seeing some of this happen already? If, let's say, households have more savings, how does that translate for the country as a whole?
I'm not seeing savings grow materially. I think we can't have a situation where savings go up materially in an environment where, I mean, if you look at penetration of pretty much any product in this country is very, very low.
Right.
So I think to that extent, consumption will continue to grow quite strongly at the cost of savings.
Right.
And therefore, the question that Neelkanth made, ultimately we will have to find avenues of pools of money to be able to fund ourselves, because there's only so many pools that we have, which is household savings, government savings, and corporate savings. I think corporates will continue to do well in an economy which is growing at, let us say, 6.5%. Government in general has been quite anemic as far as savings is concerned. I don't see that changing, and so therefore, we will continue to see some semblance of pressure on the current account if consumption continues to grow at the cost of household savings. Maybe if Neelkanth.
So that has definitely been the case so far. But if I think about the next 3 to 5 years, or if you see not just savings but also the nature of savings.
Yep.
So we are now about two
Like
generations.
SIPs as an example, right? Like that.
Yes.
Equity investments seems to have just kind of blossomed out of nowhere in the last 3
and
years.
there are lots of new asset classes coming up. So there are asset management companies that are floating, alternative credit funds, and then things, the venture capital funds. So the first round of venture capital that came into India was mostly global funds having an India allocation. What we are seeing in the last 2-3 years, even as the foreign funds have kind of pulled back because of problems elsewhere and in China and all of that, and of course excessive valuations and a down cycle, we are seeing a lot more of Indian VC funds starting to come up. So what happens after 2 generations away from agriculture is that the attraction of physical assets like land also starts to taper off. So 20 years back, if you had savings, your parents would tell you, buy some land somewhere because your great grandfather bought something, and look, we are all better off for it. In the current generation, most people are going to be actually saving. So I think what Rajiv is saying is true for net savings. So when you look at savings, there is gross household savings and there's gross household borrowing. So I think both are starting to rise, which
Right.
is that cold water, hot water. So gross savings will start to go up, and as the cost of funds and the ease with which you can lend improves, household borrowing will also start to go up. So it's the net saving which perhaps matters. But at an aggregate economic level, if say India services exports, and one of the things that I think has also happened is with this growing telecom connectivity, which we discussed earlier on the show, is that it is much easier now to participate in services value chains globally. So sitting in India, I know of fitness instructors who are giving yoga training to people in Canada and the US, but at a more systematic level, there are semiconductor fabs being run out of India. There are oil drilling companies are doing the drilling data is being processed overnight and then sent back to the site. So there's a lot of services that can be provisioned from India as well. And as this number grows up, and it is growing remarkably fast, it can actually completely wipe out our current account deficit.
Samir, just one more point I wanted to make on household savings. Yes, household savings are going up, and I do agree that yes, there's a lot of money coming into equities, and I think SIPs have been a phenomenal success story over the last 10 years. But I think the composition is changing as well.
Right.
So equities, pension funds, and such like are growing at the cost of fixed deposits.
Right.
Right. I mean, you can clearly see that banks in general have deposit growth has been fairly lackluster because of the fact that household savings is seeing this change across moving away from the more traditional products to things like
Mutual funds,
pension funds, and such like.
And the other fascinating statistic there was that 55% of Indian household savings is in non-financial assets, and this is also declared, right? So the reality might be even starker.
Correct.
So it's in land and gold.
Gold.
And so if that changes, then this picture may change even more dramatically in terms of money coming to the
But there's an interesting aspect to gold. I think one of the things that, just to go back to the point on gross versus net, the stock of gold is getting increasingly refied. Which is why you have so many gold loan companies. Banks are getting more and more into gold loans, etc. Once again, they are able to monetize their gold, may not necessarily sell it, but monetize through gold loans, which is once again good for banks, good for consumption, and so on and so forth.
Right. So moving on to two other topics I wanted to cover before we quickly close this. One is the income pyramid of the country, right? And it was a very steep pyramid. Like even if you look at the latest data, I think 5 crore people file taxes, which means they earn more than 5 lakh rupees. So this middle class that we keep talking about, like where is that, and when will that come? So Neelkanth, if you have any.
Don't go by tax returns when you're looking at
Sure.
incomes.
Oh, that's one number, right? So
look at the number of people traveling abroad, look at the number of luxury cars being sold, look at the number of 50 lakh plus apartments being sold. No, I think the class is actually pretty substantial now and
Right.
growing very rapidly. In fact, if you see the number of people who are reporting incomes above 25 lakhs and 50 lakhs and 1 crore, 20 lakhs to 50 lakhs and 1 crore, that number this year is substantially higher than what it was last year. And so that's just improving compliance. But the fact that, I'll give you a very, very simple metric. In 2012, the personal vehicles market, cars were 70% by value. Now they are 30% by value. 70% is the SUVs and MPVs. So the price points at which people are consuming personal vehicles have moved up quite dramatically. So the numbers of middle class are of course still a small percentage of the overall population, but the growth in that is actually quite substantial.
Understood. And so Rajiv, if we bring this back to the consumer business, like again, another statistic that like endlessly fascinates me is that for a country of 1 billion, there are 87 million credit cards in the country, right? And maybe the number of people with the cards.
3 crores.
Yeah, it's maybe 3 crores, right? So what does, like, help me understand, like put this into perspective and just your view of where this goes 10 years from now.
Let's look at payments in 3 buckets, right? Pay before, which means that you move money into a wallet and
Right.
then pay from that. That business is pretty much dead. It was a story for a few years and it's moved on thanks to Pay Now, which is basically whatever money I have in my bank account, I have multiple ways to use that. I could go to, in the old days I used to go to an ATM, withdraw that money and use it. So typically the use of debit cards used to be very, very strong. But today UPI is ubiquitous. right? And so therefore that is the pay now model,
Yep.
where it has become earlier. I would on a Saturday I would go to the ATM and withdraw 20,000 rupees, being expenses for the week. Now I no longer do that. I mean, if I have to pay the dhobi guy 842 rupees, I just UPI him. He's happy, I'm happy, everybody is happy, and that's the beauty of digital payments. And we spoke about in the previous episode how that number is going up quite phenomenally. There are 10 transactions per every Indian per month at this stage, and it continues to grow. The last stage is what is called pay later. So I want to buy a TV, I don't have money in my account. I would either take a personal loan or use a credit card. So the credit card is a credit product, and the beauty of the credit card is what is called the 4-party model. So there are 4 players in every transaction. There is the merchant, there is the customer, there is a acquiring bank. You go to a store and there is a POS machine there, and there is an issuing bank, the bank that has issued the credit card. It really doesn't matter whose credit card you have and whose machine you have.
Yep.
You just go to the merchant and you give him the card. You don't have to worry about if you're holding an Axis Bank card. You don't have to worry about whether that machine is an Axis Bank machine or not. The transaction will go through. Think about it like you are holding a Indigo ticket. You go to the airport and you find that there is an Air India plane which is leaving earlier. You can use the same ticket and go on to an Air India flight. That is what is called interoperability, and therefore that is what has helped us build the debit and credit card and now the UPI ecosystem. To the point that you are making on credit cards, I think as we see consumption continue to grow and more consumers come into the digital fold, which means that it becomes easier for banks to better understand them and therefore underwrite them, I think is inevitable that the credit card business that we currently have will continue to grow manifold. The form factors may change. I mean, today you continue to hold a piece of plastic in your wallet. Maybe that piece of plastic will go away and will get converted into a piece of software or an app on your mobile, and you can just tap and go everywhere. You're already seeing some form of that already. You see it quite a lot abroad, and I think it's just a question of time before the form factor changes in India as well. I think 3% penetration of credit cards is ridiculous. I mean, if you look at Brazil, it's closer to 25%. If you look at China, it is closer to 40%. So I think it's inevitable that this number will continue to grow. It's a bit of a chicken and egg situation. Earlier, what would I do with a credit card, because the number of POS terminals weren't enough. But now between the POS terminals and the UPI QR codes, you can pay pretty much everywhere digitally, and therefore you could pay by UPI or you could pay by UPI on credit card, which means that UPI transaction will either hit your credit card or will hit your bank account, and you could choose between the two. And I think that will also ensure that the acceptability of credit cards, etc., will continue to widen and go deeper and deeper into this country, into smaller and smaller merchants, and therefore the need for a pay later product, i.e. a credit card, I think will continue to grow.
Yeah, I mean, it's again a little mind-boggling, right? You're just basis the numbers you mentioned, Rajiv, there is a 10x potential here.
Absolutely.
And basis today, hopefully, like presumably in 10 years, Brazil and China also would have moved from 24, 25 and 40 to whatever else. But yeah, again, very fascinating.
I think ultimately everything comes down to what we've been discussing, growing affluence.
Yep.
I think as the nation continues to become a $5 trillion and a $10 trillion economy, many of these things that you can't think about today will become day to day.
Right.
Just for perspective, so Brazil was at our per capita GDP, what we had in 2014, they had in 1983.
Right.
So they are at least 30 years
30
ahead.
years ahead of us.
Right.
Yeah.
So it takes time. If you divide the credit card usage into, as Rajiv was saying, into a payment thing and a credit thing. So the payment thing, the fact that now a third of our transactions are digital, is quite remarkable. So at least the payment side, I think there is very strong competition for credit cards, the convenience of paying, that is. But I think from the credit side, yes, of course, there is a lot of growth. One very important indicator of how fast aspirations are changing and how fast ability to pay is changing is look at airline traffic. The fact that volume growth in those is continuing to be in double digits is itself a very strong indicator of the ability of people to pay for flights, and the fact that airline tickets, because of competition and opening up and privatization, have kind of those ticket prices have not gone up very sharply, is also, and the fact that there are more airports, but it is helping us or exposing us to the potential of how large the middle class is in India.
So that brings me to the kind of last segment here, and I go back to the hot water, cold water analogy, which is, in one of the most talked about topics post-COVID was this K-shaped recovery, that, hot water is becoming hotter and cold water is becoming colder. How has that played out, Neelkanth, and where are we today in India as we speak of this?
Yeah, so that's, to some extent, that K-shape was to be expected, and we've discussed this often, that when you lock people down, what you do is you slow down the flow of services, because the flow of goods can continue to happen through delivery boys and e-commerce, or even some stores were open at that time, but services like travel, restaurants, education, coaching, these were all shut down. So the schools were shut down, private schools were shut down. So a lot of the transfer from the rich to the poor, because services are about the rich buying the time of the poor, effectively, right? It's very rare, like in medicine or legal, where the poor buy the time of the rich. So when you lock people down, you have savings here in the rich and deficits in the poor, because they still have to survive. So they shed assets, they take a lot of loans. So when we came out of the pandemic and the opening up happened, this was a lot of savings here, excess savings here, and deficits here, and a lot of distress here. Now, then this revenge spending starts, right? So everyone starts going to restaurants and so on and so forth. And then slowly this segment starts to revive. So over the last year and a half, we have seen that revival start to happen. Now what we are also seeing is an improvement in construction. So, one of the strongest takeaways from the June quarter results was that not only is infrastructure construction by state and central governments doing well, commercial developers are building real estate, residential and commercial real estate, and the independent home builder is also starting to repair houses, add rooms or whatever. Now, this is showing up in cement volume growth, tiles volume growth, PVC pipe volume growth, and a lot of other indicators. If you're seeing so much construction, that construction cannot happen automatically, right? So there are a lot of construction jobs, and after agriculture, construction is the biggest employer. So there is a pickup in the jobs for that 8, 12, 10, 12, 15,000 rupees per month kind of jobs. And this is now starting to show up in the commentary by some of the consumer goods companies, right? Who are starting to say that, look, the bottom of the pyramid, the slowdown is now reversing. It is still not as fast as the upper end of the income pyramid, but a very visible recovery is underway. And if the rich keep spending, then that keeps creating demand. I mean, imagine a hotel room in Odisha, in Puri, going at 25,000 rupees a night. What does that hotel manager do? Add more rooms, add more people. And so it's that activity which I think will start to normalize the two sides of the cake.
And I think what is interesting is it's quite the opposite in the Western world. Post-COVID, I mean, I think in India what we've seen is demand has come back, and so therefore, people who want to come back into the labor force has also, been quite strong. In the US and in Europe as well, the demand has come back, but the people haven't.
Right.
And so therefore, that is, for you to be able to attract a waiter in a restaurant, you got to pay, I don't know, maybe 30, 40, 50% more than what you did pre-COVID. And that's once again, creating inflationary issues, yeah. And then that is, pushing interest rates up, etc. The point I'm making is just goes to show that there is a perceptible difference in how economies are doing post COVID in the Western world versus in countries like India, including in many parts of the emerging markets.
Fascinating. So again, just to kind of close this conversation, final points from you on, it looks again from a consumer perspective, we are in a sweet spot with the demographic dividend and rise in education levels and flattening of the K-shape, recovery, low consumer indebtedness, so on and so forth. What are again 2-3 risks that could derail this story going forward? Rajiv, starting with you.
Like I mentioned to you, I mean the only two things that worry me on the retail side is significant diminution in value of assets and job losses. I don't see that situation at this point in time. Let's take this 2 years at a time. I don't see that situation playing out anytime soon.
Yep.
But ultimately, how the underlying economy is doing is going to be key on how the retail books are going to play out. We are certainly in a sweet spot as far as the economy is concerned. What I would certainly worry about is the impact of geopolitics and therefore the implications on the current account rupee and therefore on businesses here in India. Uncontrollable at this point in time, but that is something that you would certainly watch out for.
Right, and also you earlier on mentioned that we have this great demographic dividend, but we have to make them productive. We have to give them the right education, and
Absolutely.
So that's maybe another long-term risk that needs to be watched out for.
I think that the point that I was making there is twofold. One is you want to get people more educated and therefore do more value-added jobs.
Yep.
Neelkanth spoke about the fact that we don't have a global brand, for example, in tech. Why are people not buying a India branded mobile phone in the US, for example, is I think an absolutely the right question that we should be asking. But for you to be able to do that, we should getting more people out of high school and therefore into IITs and such like, for you to be able to do that. Second is, if people are going to get more aspirational, getting more educated, creating a job is extremely critical. Otherwise, you're going to get social unrest. So therefore, from both perspectives, the point that I was making is I think to my mind important.
Absolutely. Neelkanth?
So some of these medium-term growth projections assume a certain level of facilitation by the government. So for example, if India's services exports are accelerating, they require a lot of jobs, and they can create, we had estimated in the next 3 years, 2 million high-quality jobs that can be created. But imagine what happens to the cities in which these jobs are coming up. So can we start to see the kind of congestion that we remember when the IT services boom was happening? It used to take like 2 hours to get from Silk Board Junction in Bangalore to the electronic city. And I think the facilitation of this in terms of spreading it out evenly over the cities, the expansion of capacities in various metros or development of new hubs, I think all of those are extremely important. And if we don't manage that well, then what seems like a very long runway can become very short.
So again, I think there is a macro story, but then the macro story will play out in pockets.
Correct.
And those pockets need to be managed.
Yes.
And this hot water, cold water keeps coming back analogy, but we need to have lukewarm water everywhere, right? And and not a combination. Great, spectacular conversation. Just to kind of summarize, on the consumer front, balance sheet look very good because our consumer is not highly indebted. You have a great demographic dividend. We seem to be making the right progress in terms of how we empower that demographic dividend through education, etc. Very long way to go, but the kind of direction seems right. And our starting point is, it has a long legway to go up. The affluence story seems to be playing out. Again, long way to go, but the story seems to be playing out, and we are seeing the emergence of the middle class and us moving towards a middle income economy, as you said. So lots of great things going on for the country. We need to watch out, obviously, in terms of how we invest into this demographic dividend, provide them the right education, right skill set, right opportunities, and then we can benefit from the virtuous cycle that emerges out of it. Thanks a lot, gentlemen, for joining me today.
Thank you for having us.
It was a pleasure to talk to you.
Super conversation, Samir.
Thank you. Thank you for listening into this episode of Open Dialogue. I hope you enjoyed this as much as we've enjoyed bringing it to you. We are overwhelmed by the response that we received and really look forward to your comments and feedback. Do like and subscribe to our channel to keep track of new episodes that are coming through. Thank you.